Hello and welcome to the Wealth Wednesday show. We are super excited to see you virtually once again, and we believe you are in good health and financially fit. Tonight, we are super excited to have an amazing guest in the house. Her name is Mrs. Simran Samtani. She is the profitability guru. You think about making profits, whether for your business, as a person, for your brand, then she is your go-to person when it comes to profitability. And today we are going to discuss on building for profits. You just don't want to build things for nothing. You want to build for profits. And our guest will guide us on how you can get to do that, especially for your business, or if you're planning to get into your business. Now, before we can get in deeper, I would like to encourage you to press the subscribe button down below, turn on notification, click that like button, and most of all, share with us in the comment section where you're watching us from, as well as any comment you might be having. Now, allow me to allow our guest to have the platform so that she can introduce herself to us and tell us a little bit more about her. Miss Simran, thank you so much for coming to the show today. We are super excited and honored to have you. May you please introduce yourself?
Thank you so much for having me. It's my pleasure to be here on this platform. My name is Simran Samtani, and I, along with my husband, run an accounting firm called Xcel Accounting. We are an 18-year-old boutique firm. We believe in giving value beyond numbers. So while we may be an accounting firm, we want business owners to take more value and get more value out of their numbers and make more sense out of it. It is our mission to empower 100,000 business owners to intentionally build their business, which is scalable, sustainable, profitable, that serves them.
Absolutely. I love the fact that your mission is to empower business owners to have businesses that are scalable, profitable, and able to serve their vision or what they are standing for. Now, Miss Simran, in the recent time, we've seen a lot of people starting a business and they want to, increase profitability. Now, in your own language, how would you describe business profitability?
Okay, so if an accountant would define profitability, they would say that it's in your profit and loss statement or in your income statement, whatever you call it, it's your income minus your expenses is equal to profit. But generally what happens is that profit on an income statement does not match the money in the bank. Okay, all businesses open themselves, start their business so that they can have money in hand, they can make money in hand, and profit is, you have to have that excess. Okay, so yes, income minus expense will give you profit, but I'm not just talking about profit, which is on the statement, because there are some accounting jargons around it, but also making sure that business owners today have profit, which is cash in hand or money in the bank that serves them.
I love the fact that you said accessible money, because sometimes the profit you see on the statement could be not accessible, right?
Yeah.
Or you see a business, they have profit on the statement, but they don't have cash flow. And you are wondering, what is this profitability they are talking about? Because on paper, they are making profit, but in real life,
there's no money. Yeah.
There's no money. And I like the way you have really expounded on that. And Miss Simran, what are strategies one can apply in order to have their business become profitable? Because I know profit don't just show up. There has to be a pathway that can lead you to that. What would that be?
Absolutely. See, it does not happen by accident. Okay, a lot of business owners start their business with an intention of making money, of course. But then once we get involved in our business, right, what happens is once we get the money, so the accounting principles will define profit as sales minus expenses equal to profit. But if you don't intentionally work towards it, it does not happen. And that's psychology. Okay, so I follow something called a profit first methodology, which just flips this formula slightly by changing it to sales minus profit is equal to expense. Nothing changed mathematically, but psychologically, you actually, by just flipping this formula, puts money in your bank. Okay? Because what you do is, it's your business, so profit should come first, right? But in
Yeah.
sales minus expense, it is whatever is remaining behind, if at all, is profit. So, so what you do is you prioritize profit as a business owner. So now that could be as little as 1%, 2%, 3%. But what we recommend is you take some element of your profit, and Profit First also tells you exactly how much to take based on the size of your business. But you take some money aside and keep it aside. And psychologically, as human beings, we will manage our expenses based on whatever is left behind rather than profit being left behind. So, one of the strategies is prioritizing profit. Now, also, as we said, I will not take away income and expense. One way to get money into your business is through income. So,
Yes.
so that is your sales strategy. So your pricing strategies play a lot of importance in how you could increase profits. Now, you could and second is increasing volumes in your business. Now, those volumes could be increased by opening new geographies, could be by adding new product ranges, could be through multiple strategies by increasing volume. So either you increase value and move to pricing strategies, or you increase volume to increase a strategy. And business model also plays a big role when you're defining and you're building it for profitability. Then are your expenses. So being conscious on your expenses, and we normally recommend 3 questions. We don't say don't do any expenses, but we ask people to do conscious spending. So you're consciously, your expenses are conscious. So you ask 3 questions: is this expense? So treat an expense as an investment. Just flip that word also to investment. Now, an investment, which means you need to get a return on whatever you're spending. So when you ask a question is this expense contributing to profit? The answer would be yes or would be no. Now, if the answer is yes, great. You can go ahead and make that expense or that investment when you define it. Second is, if it doesn't contribute to profit, does it help me in my customer journey? Does it help in? So now, not necessarily all the expenses will be directly affecting your profit, but some would be indirectly affecting your profit. Like marketing. Marketing would tend to give you results over a period of time. So those are expenses that are helping you reach to your customers. So those are also fine if the answer is no. The second thing is, if they're not giving you profit, it's not contributing to profit, it's not contributing to your customer journey, then can you eliminate that expense completely? And maybe you cannot, then can you move to a lower cost alternative? So, making sure that you're looking at this in a very strategic manner before just going out and spending that money.
I love the fact that you said we view expenses as investments, especially in business, because sometimes there's this analogy that has come: you have to cut down expenses. Expenses are bad for your business, but when you view it in terms of investment, you look at what benefit is this expense bringing to my business. And with that perspective, you are able to even spend more on that expense because of the return on investment. But now it will be return on expenses.
Yes, it is. It is true.
Right? Because I'm just thinking, for example, if you find that you have a lot of customers online and you're not good with digital things, you can choose to create an expenditure whereby you hire a digital marketing specialist. Right? And that's an investment, in as much as you will be paying salaries, but at the end you're getting your online customers being cared for, right? So I really love that ideology that you've brought about. And we are in a season where entrepreneurs, even big companies, they are trying to, you know, save some money, because, well, we don't know how long this pandemic is going to
Yes.
be.
Yes.
And it keeps on changing. The market keeps on changing. And as an entrepreneur, you're in that position where, how can I save money? Now, how can we get through, save money, especially for startups? You've been you've worked with a lot of startups, and you know how sometimes it's just a headache. How can a startup save money?
I think it's starting small, okay? Acknowledging wherever you are today, but very important is habits, okay? Things don't change now. If people are in a loss or at a debt or whatever, it's not happened overnight. It's happened because of small things that people have been making or doing over a period of time. So if you're going and buying a coffee for say 20 dirhams over a period of time, it adds up at the end of the month. Now, so like all this is adding up over a period of time. Even overnight, there would not be any changes. So you need to take small steps at a time. So and gamify the whole process. So what I would generally recommend people is to do small things, like, for example, look at all your subscriptions. Okay, there are a lot of subscriptions we just randomly go and subscribe, and we've forgotten. We've gone and subscribed to something just on a trial period, and then at the end of the month you've been charged. So just go back, and if and I've seen a lot of people, just by me sharing this, at the end of the day would have saved $100 or something, because they realize that they'd forgotten all about it. And doing this over, so you may have done it once, you may have done it twice, but doing this over every 3 months, 6 months always helps. And go and look at the subscriptions and delete what you're not using, what is not applicable. Second, you would go and choose, there are auto renewals. Okay, it automatically renews. So a lot of people before Zoom were using GoToMeetings, were paying for something else. And when they started Zoom, there are 2 applications for the same purpose, and one they're not using at all. You go and cancel that subscription in advance. So your auto renewals, go change them. So what I did for one of my situations is a lot of international or online payments I do through PayPal. Okay, and some of these subscriptions kept going in, so I just went and removed my credit card from PayPal, and then I started getting reminders of this payment is due, and then you choose which you want to again go back, change your credit card, go tick what you really need now in your continued process, and delete whatever you don't need. So do this on a regular basis, small things, and again, moving 1% of your profit aside. It doesn't hurt anybody. So say, for example, you make a revenue of 100 dirhams. Will you miss the 1 dirham that you put aside? You will not. In the same way, if you do 1,000 dirhams, you will not miss the 10 dirhams. If you do 10,000 dirhams, you will not miss the 100 dirhams. Once you get in the habit of putting that 1% aside, in the next 3 months, start making it to 2%, start making it to 3%. And over a period of time, you would not even know how much you've saved, which you wouldn't have realized at all. So, making these small steps actually help in the whole process, and having a system around it, having a rhythm around it is also something that helps. So for example, we also recommend our clients that, don't randomly sign up your checks. Okay, have a system where you're paying out to your vendors on a fortnightly basis, say twice a month. Okay, one around the 25th of the month, and one around the 10th of the month. So any due that is on the 15th of the month comes on the 10th. Anything that's due by the end of the month, you work on by the 25th of the month. Now, if it's a highly intensive industry where there are a lot of invoices, you could even do it weekly. Now, then you decide whether you want to do it on a Thursday or a Saturday. So what happens when you try to do this? A trend emerges. Okay, and a trend emerges saying, okay, in the first week, because I have salaries, I generally spend X amount of money. In my second week, I generally spend only so much. Maybe I don't spend anything in my third week, if there's any random. So what happens is, if anything goes out of the trend, you don't even have to wait for your accountant to give you your report at the end of the month. You have that pulse.
Yeah,
knowing this is generally my expenses, right? So if you're doing it randomly, you have no tracking. So we recommend that there is a system and a rhythm of when these invoices also go out. The small
Absolutely.
things actually add up, and these systems and habits go a long way in making a difference, to especially to startups and small businesses.
Absolutely. Especially these small expenses for startups, we don't feel it at that time, but after a long period of time, when you accumulate it, you notice like, oh my God, my business has been losing money that
Yeah,
I could have saved and used it on a better thing. And I like the fact that you said we need to introduce a system of tracking,
yeah,
or a
yeah,
way that you are able to know, okay, this is the date I usually do these payments, and this is what I'm expecting.
yeah,
Because
yeah,
we are humans, and sometimes you forget, or so
yeah,
many things can be coming at your table as an entrepreneur, and you
yeah.
end up not remembering that, oh, I needed to make this payment,
Correct.
or I needed to unsubscribe from this service. And yeah, I like that point that you brought across. Now, in recent times, due to the pandemic, we've seen people asking for, give me on credit, give me your goods and services on credit. I'll pay you after maybe 2 months, 3 months. While it has been a good season, and we really are grateful for the companies that have been accepting the customers' terms or the suppliers' terms, but it brings about the aspect of money collection, because at some point as a business, you will need to do the collections. You cannot just be giving on credit throughout. You will need to
True
collect the
that.
money,
True that.
right? So how can a business go about it? Because I've come to realize some businesses become so shy because they fear ruining the relationship with that company or that customer when they go for collection. So how can a person go about it?
My first line of defense, or my first line and my first recommendation to everybody, is not to give on credit if possible. Okay.
Mhm.
And how do you go about doing that? Is step number one is negotiations, right? So if people will always negotiate with you on pricing, so you have one pricing, which is your general pricing, and you incentivize people with a
Mm,
better pricing at which they can negotiate on upfront payment, either upfront payment or part upfront payment. So in some industries you can take full payment upfront, in some you can take 50%, and some can be staggered on the progress of a project. So my recommendation is to at least take some amount upfront, because there are your time costs if you are a consultant, or there are your product costs in case you are a product based business. So my first line of defense is not to reach a level of collections, is offer something upfront which is incentivized to the customer. The second stage is, if it comes to collection, have a clear cut understanding or a standard level agreement where you have agreed on a 30-day term or a 60-day term, or whatever that you feel that has helped you get that business. My second suggestion on that is invoicing. Now, normally these terms happen from 30 days from the date of the invoice, and a lot of business owners don't even invoice on time. So,
yes.
so my step number one is, if you've gone that, make sure that the invoicing is on time. Okay. Second, follow up. Okay. The money is always in the follow up, whether it's a sales follow up or in collections. So I would recommend that you follow up. Okay. You follow up, and a lot of people follow up. They won't answer your calls. A lot of people have said, so people don't answer the call. So my suggestion is minimum 5 follow-ups, and do not use the same method for follow-ups. Okay. So number one, you call. Number two, you send a text message. Number three, you do a WhatsApp message. Number four, you do an email. And sometimes you're speaking to the accountant, then speak to the owner. But try whatever works. With different people, different strategies work. So definitely follow up. The
Mhm.
most, if you currently, nobody is giving, there are statistics which tells you even on your invoicing what to write. So in your invoicing, my recommendation would be always write due by, so the due date which is highlighted. Okay, make sure all the aspects in the invoice are correct. Sometimes if there are errors, they'll come back and say, oh, now there's an error in the invoice, so redo the invoice, and those are tactics to delay your payment. So make sure when you're sending the invoice, the details on the invoice are correct. And my suggestion, if you're giving paper invoices, there is a trend which says that if you give it in yellow paper, you tend to get it much faster. Okay.
Oh,
Because, yeah, so when there are pile, everybody gives white paper, right? So if you're giving,
yeah.
because yellow also has some psychological effect. So you can just say, oh, that yellow paper in between. So again, my suggestion would be, if you're reminding on email multiple times, start writing reminder 1, reminder 2, reminder 3. And if you're calling the customer, okay, and the customer, somebody picks up, the accountant picks up, or the business owner picks up and say, listen, I don't have the money right now to give you. Do not close the call till you get an assurance of when the money will come. Okay. At times they will say, okay, can you send me part payment? Can I then call you on Thursday? Can I expect it on that day? And if you have the day, always make sure you have a promise of the next date or the next step. Okay, because they will not, generally, see, nobody has the intention ideally of not paying because they want to continue in the business. They're not paying you because it's whatever challenges, they are not getting money from their clients. So my third suggestion is make it easy for them to pay you. So if people are not being able to give you cash, they might be able to pay you by credit card. So if you don't have the credit card link today, start having those links. There are a lot of now other elements who also give people installment plans on credit cards. So if it's a product, there are things like Tabby or whatever now get converted into installments. So whatever works for your business and making payment easier for them. If you can collect PDCs in advance, it's better because they will only say, okay, hold on my check for a week or whatever. So secure the payment in whatever format that's possible for you.
Absolutely. And Simran, I like the fact that you said it's good sometimes to make your invoice in a bold color, which is, yellow is very outstanding.
Yeah.
It acts like a reminder psychologically. Every time I'm walking in my office and on my desk I'm seeing a yellow invoice, I'll be, let me check this paper, compared to, other colors like white and all that, which is a good thing, especially, we are so distracted nowadays. When you get to your desk, you have emails to check, you have a phone to check, you have what to do. So sometimes you have to work on the psychology side of human beings to get paid on time. And I like the nuggets that you've shared, especially on matters of follow-up. Yeah. Don't just follow up and leave yourself hanging. Get exactly when do they plan to pay you, or when should you call again? Because I've seen most business entrepreneurs or business owners, you ask them, did you follow up? Yes, I called and the accountant just told me the owner is not there. Then what did they tell you? Like, when will they pay you, or when should you call again? And like, oh, I forgot to ask that. So you see, that was, the person did a follow-up, but there was no feedback. Generally speaking, there was no adequate feedback. So I like that nugget. And
they say crying baby gets milk, right? So if you're keeping on following up, they will be paying when they get the money, someone or the other. So make sure you're on top of that line to get the money first.
Absolutely. But the best thing that you've said, don't always go on the line of credit, especially if you're just starting out. Yes. You better be on the safe side than start to, struggle trying to get your money. Now, I checked out about Xcel accounting, and I really love what you're doing together with your husband. I learned that you've been in business for over a decade.
That's 18 years. Yeah.
Wow, congratulations.
Thank you.
Yeah, it was really an inspiration to me. And would you share with us the stages of business crisis trend? Because you've been there for 18 years, you've seen most of the trends, and you're able to tell when a business is about to go into a crisis.
So a business crisis trend is similar to, a grief cycle in personal life. A business crisis trend is something businesses go through at different stages of a business, due to personal reasons, due to economical reasons, recently due to the pandemic. So again, there are 5 stages in this crisis. Now, in some cases, it could happen because of a personal situation, if partners leave or whatever in the business. For sometimes it could be due to medical reasons. For sometimes these would be due to a recession that comes in. So any situation that happens, the first stage is grief. Okay, it's shock. All right. So what happens is when a crisis ends, it does not come announced. Okay, it always comes unannounced. All right. So what happens is whenever a business goes through it, it's like somebody's punching them in their face. So when that happens, people get shaken up, don't know what to do, they're disoriented, they really don't understand what to do. And normally in these situations, businesses would freeze. Now, when you freeze, it leads to inaction, which means there is no action being taken. So that doesn't mean one doesn't go through whatever has been happening. So what we recommend is you acknowledge what's happening, whatever the situation would be, acknowledge, feel the feelings that you have. It's not how long the business remains low, goes low. This cycle will happen for all businesses at some point. It's how fast you bounce back. Okay, so whatever helps you. And the key to this is everybody's gone through a personal crisis. So whatever has helped you get through it, could be meditation for some, could be speaking to someone, speaking to your mentor, consulting a friend, listening to music, whatever helps you calm down so that you can get out of the inaction to action. Follow whatever has worked for you in the past. Seek help if required, but get out to the next stage. Now, the next stage is still disorientation. Right. So while you're being shocked, you're still not clear of what is happening, where you're going, what you're doing, and it's fine. Right. Again, we don't have to be in the disorientation stage for very, very long, because over here, there's nothing much we can do, but we need to absorb what's happening, acknowledge what's happening. So this happened in the pandemic. Nobody knew how long the pandemic was going to last. Nobody had any idea. And people thought, okay, first they thought it's 2 weeks, 1 month. When it went to 3 months and 6 months, it became the norm. Wearing masks have become a norm today or whatever. So, but at that time, while the phase will not be long, one needs to remember that phase won't be long, but to try and get your orientation back, try and see what can help us stabilize in the moment. So collect the data, do whatever. The next stage is evaluation. Okay, where things are starting to move back. And pandemic, you would have seen this trend when people are starting to move back. But even when starting to move back, you have to now start collecting data. And the data collection takes from any time between 3 months to 15 months. You don't know what's happening, but that's the best you can do, is understand, which industry. So even during the pandemic, some industries did very well. Some people shifted business ideas. People started selling masks, and so even fashion designers started doing masks. So how can you shift and collect the data? So what's doing well right now? What can we do? Should we change our business model? Should we shift to something else? Maybe so now pandemic was global, but other things need not be global. They might have been local. Then can you go global? Then you start looking at different factors. So second stage comes to evaluation. The next stage is deliberation, where you're actually strategically deciding where to go, because none of these trends are going to last for very long. Whether they're short or long, it has to come out of that situation. So at that time, preparing for what's going to come. So even during the pandemic, certain industries made sure that they had time to be strategized, to see when the market picks up. So we knew Expo 2020 moved for 1 year down the line, then deciding which are the industries that will work at that time. If you're not directly targeting those industries, which are the other industries that will help in that season? Can we tap that? So serve the trend. So taking strategic action is the next stage. And the last one is surge. So that's when you have to be ready to rock it. Okay. In this whole crisis, especially if it's a global crisis, it's a global recession or it's a pandemic, some of your competitors will go away. Okay. People who survive this time will thrive. Okay. So what are you doing as a business to make sure you're surrounded yourself with the right kind of people, having the right kind of conversations, being positive, all that helps at that time. Again, from your business, whatever amount of money people had, okay, we normally would say keep 3 months buffer, but 3 months buffer didn't help a travel agent or an F&B industry right now. So maybe 3 months won't help, 6 months won't help, but making sure that you are conserving what is needed at that point of time, and going forward when the surge comes, to start making sure that you're keeping more of emergency funds in your account later on. So all that helps go through the trend. So any kind of support that's needed, it could be financial, it could be people support, mentoring support, gathering information, because one idea, I mean, one idea can change everything. So, yeah. And the most important part, what we've learned during this pandemic is not keeping all your money in one basket. So having recurring revenues, multiple streams of revenues within your business. And you've seen that happen with a lot of industries. A lot of retail shops went online. So today, one of the trends we've seen is nobody's marketing through one channel. They're marketing through multiple channels. People started complementary businesses, so a lot of people who had the money has actually bought out businesses who were going in distress sales. So even there are opportunities in such times. So looking at these trends and finding the support that you need, and surrounding yourself with tools and people that are there to help you move forward.
Yeah, that is very true, especially the fact that you say don't put all your money in one place, create multiple revenue streams, especially for your business.
That's right.
So that if one product or service is not performing well, the other one can come in as a boost. And I like the fact that you said during a crisis, it's good to have it at the back of your mind that you will bounce back,
Absolutely.
When you have that thought back at the back of your mind, it gives you hope and even allows you to, push through the crisis, especially for a business. Now, they say cash flow is king in business.
Yes. I would say it's the oxygen to your business.
So what are the strategies we can apply in order to maintain cash flow in our business?
So there are statistics which say 82% of the businesses fail in their first year. And what people don't know, that 69% of them were profitable. Profitable on paper and no cash in hand. Okay. And that's yes. So which is why cash is king. And that's why I said it's oxygen to your business. For you to be able to survive through tough times or through any times, cash is extremely important. So for cash flow, there are lots and lots and lots of strategies, but being aware of where you are today is the most important thing. Okay. People don't know, because there are a lot of people who fear numbers. Okay. They don't know where they are. Right. Yes. Now, if you were to sit in your car today, you would go to your GPS and put your next destination. And the car will identify where you are today and take you there. Now, in your business, how do you know where you are today? People fear accounting. People fear numbers. And accounting is the language of business. So first and foremost, one needs to know where you are today. Then you can apply the strategies that you need. So for example, summer is coming and you have your bills to pay. But maybe your business will not have the revenue if you're in an event business or a kind of business. Having that knowledge of how much money you have today, till when will that money take you to survive before you can go, that will help you decide which strategy to adopt. So you could do a pricing discount saying that, okay, somebody wants to take my services in October or November, but if you pay me today, I will give you a discount. If you buy in bulk, I will give you a discount. So you're making sure your discounts, your pricing, your whatever, one of the strategies you can adapt if you know that you won't have the cash flow for the next couple of months to make your payments. Being aware of what payments you have to make. okay, is also important. So today you'll see somebody saying, oh, I'm giving you a discount. Your bank balance is not your cash balance. You look in the bank, you have money, but you've forgotten that you've given a check for the 15th of next month for your rent. So today you may maybe go and avail of a discount, but you've not tracked it. So cash flow forecasting, knowing where you need to go, depending on the status of your business, your cash flow forecasting could be weekly, could be monthly. In some cases, we would even recommend for them to have a look at it daily, if they're in a crisis situation. But having that understanding as a first step is very important. Then based on your situation, you will then adopt the strategy. Your strategies would be, what I will say is very simple: get the money in as easily as possible and give it as late as possible. Easier said than done, though. Easier said than done, though. But that's how it is. That's what simple language it would be, is to get the money in, get the inflow in as fast as possible. So upfront payment terms, pricing strategies, whatever you need there, and negotiating with your vendors to pay them later. Okay. So, and what I say is, one thing I always mention is, a lot of people don't negotiate. Okay. Because they fear negotiation, right? So my suggestion is, never fear to negotiate, but do not negotiate out of fear, because that will be evident on your face. So definitely negotiation is one strategy, and negotiate your payment terms, your vendors, depending on your cash flow situation. Be upfront. If you let them not follow up, if you can't make the payment, tell them in advance. Okay. Now, when you are in that situation, some of the people, and people have used this in pandemic, will pay you if you give them a discount on your payments. So you have to understand which of your clients have high cash flow and offer them some discount to give you that payment in advance, because they have the cash flow. Okay. Understanding which of your products are profitable, whether it's volume-based business, whether it's value-based business. Now, there are a lot of other things which banks will help with. There's something called bill discounting. So what happens is, if you have an invoice which your customer is going to give you after 90 days, and if you're a reasonable person and your client seems to be reasonable, banks will pay you the money upfront at a cost, but they will go and collect it from the customer after 90 days. So it's called factoring or bill discounting. Okay. Yeah. So those facilities are available today. Now, for a new startup, maybe you won't get a loan for your business, but you may get a loan for your asset. So if it's a clinic and they want a chair, a dentist want a chair, the chair can be on an installment plan. A car for your business can be on an installment plan. So there are parts of your business elements that you can take a loan on your assets. Okay, so understanding that. If you have a big office and you have the same sponsor, you can share that space.
Yeah.
So, so there are the leasing versus buying. So again, outsourcing versus hiring is another strategy. Whereas if you want, so you mentioned social media in the past. So if you want somebody to look at social media, you need not hire someone, because you don't need someone full-time. You can outsource it, okay, to somebody part-time. You can outsource it locally. You can outsource it internationally at other geographies that are available at lower prices. Today, that's called gig economy, where they say you can just outsource projects. So I personally believe outsourcing is a great cost-cutting, cost-saving strategy, depending upon you do what you love most and outsource the rest. So it's not about whether to outsource, it's about what to outsource. So again, if you need funds, then you have to decide whether you want to. So how do you increase your capital? Do you want to borrow money, which is difficult from banks? So if your families, do you want to give percentage of your equity and get an investor in to grow your business? So looking at different strategies based on what your business is, how you want to grow it, and what your cash flow situation is at the moment. You will choose what is right for you.
Absolutely. I've actually learned something today from you, bill discounting. I didn't know about that. And that's a very great concept, especially when you want to deal with a contract or project that involves a lot of money. And I love the fact that you've also stated about outsourcing, because I have come to learn sometimes we spend too much time doing things that we could outsource
Absolutely.
at a very low fee and get the quality we want, and at the same time utilize that time to do other better things that can, earn us more income in business, so. And then this pandemic has brought about the digital era where I can work with someone in another continent without having to go there or them coming to me. So I think this is a good concept that businesses need to embrace. Now,
I normally would ask a person, how much does your how much is the value of your 1 hour? Okay, so if you were to be doing a business revenue generation, like lawyers and consultants would have their hourly rates, but every entrepreneur should know what is their hourly rate. So once they know what their rate is worth, and then you have to see is if that activity that you're doing can be outsourced at a lower cost, give it to someone else. And especially if you don't enjoy it, you will take a lot more time. And like you liked my word on return on investment, I would like to ask people the same thing on ROTI, which is called return on time invested. So where are you investing your time and what is the return on it? And look at that and then decide what you should do and what you should either delete completely, delegate it to somebody else in your office, or outsource it.
Return on time. That is something to think about it. I really like it. Return on time. And most entrepreneurs, especially people, let's just say most entrepreneurs think that they need to work 24 hours for their business. Yeah. And, at such a point you ask a person, now, if you're going to work for 24 hours, what is the return on this, what you're doing for 24 hours? Because that means there's something else in your life that is going to suffer.
Yes.
Because of business. So I like that idea of return on time. Now, Simran, I would love us to continue with this conversation because you're just bringing us more and more wisdom about business. But we are coming to the end. And, sure. I've heard you saying about 10-10 method. I've listened to you quite a number of times. And I was just wondering, what is this 10-10 method? Would you mind sharing with us?
I'll make it quick. It's a decision-making tool. It's also a book with the same name by Susie Welch. It's called 10-10-10, which means that there are lots of decisions we make based on emotions. Okay, so if you use the 10-10-10 method, you ask yourself that decision, how would you feel in 10 minutes, in 10 months, or in 10 years? So say for the pandemic, people felt that, oh my God, I need money. So what should I do? Should I just go to the bank and remove all the money? Should I borrow on my credit card, get all the money? But you know what? These decisions, while emotionally you'll feel good in 10 seconds or 10 minutes, but in 10 months, you will be paying interest. And in 10 years, you would realize that is such a bad decision that I lost money on. The same thing you would say is, you know what? The pandemic is, should I go for a new product? In 10 minutes, you'll feel, oh my God, it's a lot of work. In 10 months, you will start seeing that it's giving you revenue additional. In 10 years, it may have replaced what you're currently doing and it could be the most profitable thing for you. So looking at that in how would you feel in 10 minutes, 10 months or 10 years, and not taking impulsive decisions, but using this tool, stepping back a minute and using this tool helps you make more informed decisions.
Oh, okay. I like that. Stepping back and thinking in 10 minutes, what will the effect or what are the consequences of the action I'm about to take? Yes. And I think that brings us to the end of today's show. And I know our viewers are going to learn more, especially get takeaways the way I just had. I think I have 3 takeaways. Number 1 is the bill of discounts. The other one is return on time. And the last one is, of course, the 10-10 method. I'm going to look for that book as well. Sure. Now, Simran, if someone would want to connect with you and get your services, how can they reach out to you?
So they can go to xcelaccounting.com, www.xcelaccounting.com, and reach out to us. They could connect with me on any of my social media platforms, LinkedIn as Simran Samtani, Facebook, Twitter, Instagram. Follow us on any of our social media and just reach out to us, and we'll be more than happy to assist you. And I also have a closed Facebook group where I give free tips. So just follow us anywhere for free tips and resources.
What's the name of the Facebook group? Is it
Build
Xcel?
for Profit. It's called Build for Profit. Yeah.
Oh,
yeah.
Oh, nice. Nice. I didn't know you have a Facebook group under that name.
Yeah.
Of
Where I
course.
share videos and free tips and free resources.
Oh, thank you so much. I'm gonna join it as well. So thank you so much for your time today, Miss Samtani. We really appreciate your wisdom, and we are super excited. And hopefully we shall get to do another episode later on so that you can explain further, because we need to make more money. We need to make profit.
We need to keep more money of that we make, not just make, we need to keep more of it.
Oh, yeah. Actually, I think the next episode we can have is how to keep money, because
yes, absolutely.
A lot of businesses will be able to make money, especially after they watch this episode. They'll make money, but they need to learn how to keep it so that it can become more beneficial and allow the business to be scaled upwards.
Sure.
Now, without taking much of the time, thank you so much to our audience. Thank you for being with us. Thank you for watching. And as always, subscribe and leave us a comment in the chat box, and we'll be more than happy to hear from you. Once again, thank you so much, Simran. We are super happy and honored to have you in the show.
Pleasure to be here. Thank you for having me.
Thank you.
Thank you.